A good late afternoon. Thanks for joining us. I'm Sage and you're watching Kalkine TV live from Sydney. And this is the last show of the day, the last trade. And there's no better way to wind down the day and, in this case, the week, than with the latest market close commentary. And in today's show, we'll look at the overall ASX 200's performance of the day and also explore gainers and losers. And this would be followed by shares that grabbed the limelight today, such as Domino's Pizza Enterprises, Silver Lake Resources, CIMIC, Pro Medicus and West Cobar Metals, and many more. Then I'll share trending updates from the Asian and global markets. And finally, in the last segment, we'll have a special report on cryptocurrencies. So let's get started. And after muted performance in September, the Australian share market started the month of October on a bearish note, slipping over 4 months' lows on Friday. Interest rate sensitive stocks such as the financials, real estate were among the worst performers, and amid the looming fears that the rising inflation may prompt the US Federal Reserve to announce its first pandemic-era interest rate hike. The market sentiment was also dented by uncertainty surrounding the crisis hit China Evergrande and the end of ultra-supportive economic stimulus. The Aussie benchmark index, the ASX 200, is 2% lower, and the index opened lower today and nosedived as much as 2.4%, crossing below its 125-day moving average. The ASX 200 witnessed highly volatile trade this week, falling 2.14% over the last 5 sessions. And moving on now to the sectoral front. All of the 11 sectors ended in negative terrain, led by a 2.9% decline in financial stocks. In the banking sector, all of Australia's big 4 lenders, Commonwealth Bank, ANZ Bank, Westpac and the NAB, ended lower. And the financial sector was followed by A-REITs and consumer discretionary, which closed 2.4% lower. Material and healthcare sectors settled with over 1.5% loss, while the industrials, energy, telecom, consumer staples and tech dropped over 1%. And on the IPO front, a mineral resource company, West Cobar Metals, made a debut on the ASX, and the stock rallied as much as 25% on their first day of trade on the ASX. The mining stock began trading on the ASX after successfully raising 5.5 million Australian dollars at an offer price of 20 cents a share in its initial public offering. The company, which owns projects in New South Wales, plans to utilise the IPO proceeds to fund its exploration for target commodities such as copper, gold, lead and silver. Let's now take a look at the top gainers and losers of the day. English bank Virgin Money UK topped the ASX's losers chart by falling 7.9%. Some of the other worst performers were mining company Mineral Resources, financial services firm Hub24, pizza chain operator Domino's Pizza Enterprises and plumbing waterworks business Reece. On the flip side, however, the gold mining stock Silver Lake Resources, Gold Road Resources and Northern Star Resources were among the top gainers on the ASX. Investors rushed towards a traditional safe haven asset, gold, as other industries tumbled amidst the global economic uncertainty, and some of the other notable gainers were Australia's largest independent coal miner, Whitehaven Coal, and wealth management company AMP. And we've reached the time for a small break, but do stay tuned with me. I'll be back with more trending market updates. Property by Kalkine. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on Kalkine TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with Kalkine. Welcome back, Sage here with the market close commentary. for Kalkine TV. Let us now shift our focus to the stocks that fetch the investors' attention today. And first up, we have shares of Domino's Pizza Enterprises that declined as much as 8% to hit an intraday low of $147.66. The shares of Australia's largest pizza chain were the biggest loser on the ASX today. And overall, the share price of Domino's tumbled nearly 7% this week after the company announcement regarding the management restructure. And on Wednesday, the company proposed a twin region structure to focus on business opportunities in Europe and the Asia-Pacific region. In line with its strategy, the company announced appointments of senior executives to lead the next phase of significant growth. And the next update comes in from engineering services company CIMIC, the shares of which fell as much as 2.2%, down to $19.22 Australian. This is in line with the benchmark index, and the stock has witnessed selling even after its group's firm secured a $297 million Australian dollar contract. The company UGL has bagged a contract to design, manufacture and supply new fuel-efficient diesel electronic locomotives for its long-standing client Pacific National. The contract will be valid for 7 years, and it is expected to solidify UGL's position as Australia's only manufacturer of freight locomotives. And the next company on the list is shares of Pro Medicus, declined as much as 2.14% to hit the day's low of $52.90 Australian, tracking a broad basis selling across the healthcare space, and the healthcare index was down 1.8% by the afternoon's trade. The company informed its shareholders this morning that its wholly owned US subsidiary, Visage Imaging, inked a $40 million Australian dollar contract with Novant Health. And the 7-year contract will see the company's Visage 7 enterprise imaging platform and Visage 7 workflow module implemented throughout Novant Health. And this would provide a unified diagnostic imaging platform across the network. Next up, the share price of Chalice Mining tumbled over 5% after the gold miner's long-serving chairman and founder Tim Goyder decided to retire from the board at the upcoming annual general meeting in November of 2021. And Goyder will continue to consult with the company in a part-time advisory capacity until the end of June 2022. And meanwhile, the company has appointed Derek Lafurla as an independent and non-executive director, effective from the 1st of October 2021. And meanwhile, the shares of Galena Mining traded flat despite securing contracts. And the company said that Abra Mining, the joint venture company for the Abra Base Metals project, has secured 2 key contracts for the development of Abra. These new contracts support the transportation and export of its high-grade lead-silver concentrate from Abra through the Geraldton port in Western Australia. And next up, Adbury, a supplier of construction materials, has signed an agreement to acquire the sand operations of Metro Quarry Group in a 50-50 joint venture with Barrow Group. The company will initially inject circa $30 million Australian dollars into the newly established joint venture entity to fund its share of the purchase and working capital. The transaction is slated to complete in November 2021. And meanwhile, the stock of ABC was down nearly 2%. The next update comes in from Mosaic Brands, whose shares dropped 3.5% after the women's fashion retailer unveiled plans to acquire the remaining 49.9% stake in online fashion retailer Easy Buy. Mosaic Brands purchased a 50.1% stake in New Zealand's e-commerce operation, Easy Buy, late in 2019 for just $1 Australian. And up next, and the last news in this segment, is from Playside Studios, whose shares rose 2.5% after the Aussie video games developer acquired the Dumb Ways to Die, also commonly known as DWTD franchise, from Metro Trains Melbourne. It will acquire all of the DWTD assets, including the copyright, trademarks, merchandise, domain names, social media accounts and software. The deal involves a cash consideration of $2.25 million Australian dollars, which represents 1.5 times DWTD's financial year 2021's revenue. The acquisition will be funded from Playside's existing cash reserves and will be immediately accretive to earnings and earnings per share. And now we'll just take another small break, but do stay tuned with me. I'll be back with more of the trending market updates. Property by Kalkine. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest lowdown on the property market, tune in on Kalkine TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with Kalkine. Welcome back. This is Sage and you're watching the Market Close commentary by Kalkine TV. And now that we know what the stance back home is, let us move on to our next segment and understand the Asian and global markets performance. Shares in the Asia-Pacific region were trading mostly lower on Friday, while markets in Hong Kong and mainland China remained closed for a holiday. The Chinese stock markets are closed for the Golden Week holiday from Friday till October 7th. And Japan's Nikkei was the worst performer in the region, tumbling over 2.5% following an overnight fall on Wall Street. The market witnessed bearish trades despite improvements in manufacturers' sentiment. Index for large manufacturers' sentiment rose to 18 during the 3 months ended September, as per the Bank of Japan's quarterly Tankan Business Sentiment Survey released on Friday. The Straits Times Index in Singapore traded 1.15% lower, while Taiwan's weighted index plunged 2.4%. India's BSE Sensex also fell 0.6% in the opening deals. In a similar trend, South Korea's Kospi fell 1.6% and Indonesia's Jakarta Composite dropped 0.8%. Thailand's SCT Composite also traded 0.5% lower. And meanwhile, the Wall Street witnessed sharp sell-offs in the overnight trade, with the S&P 500 posting its worst performance since the onset of the global health crisis, as COVID-19 and inflation concerns kept investors away from risky bets. The S&P 500 plunged 1.19%, while the Dow Jones Industrial Average fell 1.59%. The Nasdaq Composite Index closed 0.44% lower. And we're now in the last segment of the show. Let's have a quick look over the buzzing crypto markets performance. Snapping overnight gains, the major cryptocurrencies were trading flat during the Asian trading hours on Friday, as investors remained wary after China tightened the screw to impose complete bans on crypto trading. And after banning all trading in cryptocurrencies last week, Chinese authorities are working to fix regulatory loopholes, leaving no room for investors to invest in virtual coins. However, in a much-needed respite to the market, US Federal Reserve Chairman Jerome Powell on Thursday said he does not intend to ban cryptocurrencies, adding that it needed greater regulatory oversight. And the price of Bitcoin, the world's largest cryptocurrency by market capitalisation, was currently trading 0.5% higher. Ether, the world's second largest crypto, was down 0.4%. And Cardano, the third largest cryptocurrency by market capitalisation, was trading marginally higher, while Dogecoin's prices climbed 0.3%. Among others, Stellar, Uniswap, XRP, Polkadot, Chainlink, Polygon, Binance Coin also saw lacklustre trade amid the muted response from investors. And thanks for joining us on that report. But that's a wrap, folks. Hope you found the market closing commentary informative. We'll be back on Tuesday, live from Sydney, 9:30 in the morning, with our first report on the pre-market scenario. So stay safe and enjoy the long weekend.